Okay. So we got to take a look at how to enter in a sales receipt, right, for people who make payments at the time of the sale, right, whether they are cash, credit, or a check. And we also got to take a look at how we can enter in our transactions that dealt with, customers that want to place their purchases on an account. So we created an invoice, okay? And we created two separate invoices. One for regular invoices, right? For someone who's just entering in a sale. And then we also got to take a look at how we can actually use the discount and subtotal items, okay, to create when we have our sales going on. So that's the two ways that we got to take a look at that. Now, we're going to go ahead. I already showed you how to look at the open invoice report, okay? So now the next thing I want to go ahead and talk to you guys about is, well, what happens after we've done an invoice and we're pending on a payment from our customers. So here we're looking at payments, right? Whether they pay us via check or whether they pay us via credit card or whatever form of payment that they decide to choose to pay us. We're going to go ahead and take a look at this example here. So, of course, we're going to talk about the ways that we can receive a payment. So, exactly how we saw it before, right? Every single way that we look at it, whether it is, the exact same ways that we enter in an invoice, is pretty much going to be the same exact ways that you're going to receive a payment. So notice this, always. Now, it's identical to making payments to our bills. We must record our payments, receiving our payments, if we want to lower our accounts receivable. So for example, right, looking at this exact transaction here, in order for QuickBooks to recognize that we received a payment from an invoice, we must use the receive payment function. Or else, if we just say that we entered in money, right, we just go directly to our checking account and enter in that we received money, it's going to make no association to my actual invoice. But another thing too is you can't just enter in your check directly into your check register. You could if that's how you want to view your entering your sales, but you also have to remember we have a pending account called the record deposits, or also known as the undeposited funds account. So either way, whether we enter in something, right, we can never use a sales receipt to enter in a payment from a pre-existing invoice, because it will not make any association on top of that. Therefore, you're going to be counting two different sales, right? You have one that's already existing as an invoice, and then you're creating another sales receipt. So you're entering the sales twice as much. So in this case, you must follow the line along and click on that receive payments. So for every single way that you can enter in an invoice or a sales receipt is going to be the same exact way that we enter in a receive payments. So here again, we could do that by doing it on the home page. You could do that by going to the customer menu bar and receive payments, okay? You can also do that when you're in the customer center, right? New transactions, receive payments, okay? Right here, receive payments. Right click on a vendor and you'd be able to receive payments, okay? Same thing too, if you already clicked on that vendor and you go to manage transactions, you can also receive payments. So all of those ways are completely valid. And I believe you could do that also on the income tracker too. You have that manage transaction section at the bottom. So here it is. Here's the income tracker. Let me pull this table up. Oh, I'm in the wrong one. Income tracker. Okay, and you could go here and you'd be able to receive payments just as well. Okay, but even more better, you could go directly onto the invoice itself. Okay, so let me just click a random one, right? At the very top of the window, you also have the receive payments function at the top of the window. Okay, so that's 7 ways that you can enter in receive payments. Okay, so once again, I'm going to close all the windows because I want it to be a blank one. I don't want to look at an existing one. I want to look at a blank one. So I'm going to go ahead and click on receive payments on the home page. So how do you actually pull up those invoices? Pretty straightforward, right? You just type in the name of the customer. So in this case, Bob Mason is the customer I am looking for. And what's going to happen is once you tap on his name, it's going to pull up every single invoice that exists under Bob Mason. So as you can see here, we see that he's got 3 payments right here, or 3 invoices right here, right? We got invoice number 3947, invoice 104, and invoice 106. So when we go ahead and do that, in order for you to properly go through with everything, you need to make sure first things first is what was the amount for? It was for the 401.39. Okay, that's what I received the payment for. Now, what date did I receive this payment? I believe I received the payment on the 28th or 29. I think so. I think it was on the 29. And then, or actually no, I think this was on the 28th. The other ones are the 29. So here's the 28, right? And then now you're going to select what kind of form of payment you received. In this case, I received a check. All right, and this check number was for $52.56. So it's very important that you identify this. And then what you're going to notice is it automatically selected this one because it recognized that, hey, these numbers match. Now, for any instances that you do end up like having to put more information in, but the number one thing is that you must enter in this first before you can click on any of the invoices, because it will not let you select which invoice you're paying unless you have this amount in here. So for example, let's say that wasn't for that invoice. It was actually for invoice 104. It will recognize that, but it has to be the number that you place here, the amount of payment that you're receiving must be there first. But in this case, I'm not making a payment to that. I'm actually making a payment to the $39.47. Okay. And it's for the exact amount. So therefore, right, everything looks good. And then the date looks good. The check number looks good. We selected that he's making a payment for just this invoice and this invoice only. So we can go ahead and click Save and Close. And you get that beep approval, and notice this. Now my little notification, little bubble right there says I have 2 pending payments in there. Okay? So that one is that one. Any questions there?
Yes. So, okay, he did pay the 401.39, but what about if he want to pay him that one and the one for 776?
Okay, let's go back to that one. Let's
Yeah, if you
go.
put them both together.
If we put it both together, right? But the amount that so you can go back here. So here we recognize that Bob Mason, right? He made a payment for just that invoice. You can select the other invoices, but the thing is you must always put in the number here first. Okay? Because again, your customers, right? And that's the next section we're going to talk about is that what if your customer decides to just pay you half of the bill? Right? if they're going to pay you half for half the bill, right? And they kind of write on the check that they want to associate with this particular invoice, then your assumption is that it's going to be applied to that invoice. Now, if they just give you a random check with a bunch of numbers on it, right? Your first thought needs to be that you're going to pay the most latest, not the most, the first invoice that they've associated first, or that you've created first. You always do the most earliest invoice. So in this case, if he just sent me a whole check for $1,000, right? It doesn't tell me which invoice will apply it to. Then I will apply it to the first one, which is the $39.47, and then I'll go ahead and apply it to the second one, right? So Elena, your question was if he made a check for both of them.
Yeah, like if he would have paid the $401.39 plus the one for 776.47. So, do you put both checks on the same invoice? Like you got it right now, just put the amount and
Oh,
then
okay.
put the little arrow on the second transaction also? And
Okay.
put them both?
Now, if he wrote you one check, then yes, you can select multiple invoices. Yes, a customer can pay multiple invoices with one check. But let's say he sent you two separate checks. Then you would have to do one at a time because the check number is very important, because that's going to be his paper trail of his proof that a transaction has occurred, right? That's how he's going to keep track of his bills.
And so do we.
Yes, and that's for as well as for us too, right? If he did make a payment with that one check, then we can check mark which ones he made a payment to. So yes, if I wanted to, I can say that yes, he paid for this invoice and for this invoice. But in this case, it won't let me because I already recorded the transaction. But in this case, you would have to undo it, right? But in this case, it's already set that he paid the exact amount, and it was for the later invoice because there's a due date on them. So each invoice that you do select, right, if I were to click on it, will give you the due date right here. So it is due, let's see, it's due net 30. So it tells you, it's supposed to give you the actual date that it's due on. That will probably be on the income tracker. It's supposed to it's due on the 1st, right? So in this case, he paid a couple days before that, but he didn't make the discount period, which we'll talk about that in a second as well. But here, we recognize that he paid with one check only for one invoice, okay? But yes, if in case he does pay for multiple invoices with one check, then you can check mark them. And we'll take an example of that with the next example, right? When we receive a credit card payment. Okay? That someone can pay for all the invoices with one check. But if they're the kind of person that wants to keep track of every single one that they've written or every invoice that was ever sent, then they can send you separate checks. You just have to enter them in separately because I can only say that this check number here, the 5256, is only for invoice number 3947. Okay? Okay. So that is that one. Okay? So any questions? So like again, it's straightforward. It's pretty easy. You just have to enter in, the important information such as was this check sent in, what was the check number, and which invoice they were intending to pay. Okay? So that was that one. Okay? And then, like I've briefly mentioned before, right? Well, what happens if a customer decides to pay for only a portion of their bill? So I'm going to go ahead and do this example real quick. I'm not going to enter it in, but I do want to show you, what happens when you report that, okay? So I'm going to go ahead and type in that I'm going to say Anderson Wedding. Okay, Mr. Kumar and Sati, I believe, right? They have a bill, and it shows right here for the bill for the invoice number 4003 that they owe us $249. But what if they said I can only give you this for now? They only paid half of it. So in this case, they only paid 125. Okay, let's just say if they can do that, right? They make us a payment. Now, of course, if you read the book, it gives you options on what happens when a customer underpays you, right? You need to send them an invoice saying, hey, what's up? Why are you only paying half? And if they tell you, oh, it's just because I can afford that right now, but I'll make a second payment to you later on, then you can say, okay. Or for other instances, you send them another notification, a new invoice, a updated statement. For whatever reasons that you need to figure out why this customer is giving you a partial payment, you definitely want to make sure that you definitely accept it at any given chance. Because again, when you're dealing with customers and that you allow them to owe you on an account, your assumption is you cannot trust all of your customers to be responsible enough to pay for all of their bills. Because there's things that happen, right? Economic downfalls happen, right? Depressions or recessions. People can lose their jobs instantly, right? It doesn't. You can never depict on a customer situation, right? Because if they're you're billing them for a particular thing, you can never assume that you're going to get your money 100%. Okay, and when we dive into the accounting, you're going to learn that at least 5% is the minimum that a company can write off as a bad debt, or can assume that that money will never be collectible. Okay, and that's the assumption here, right? We can't assume that everybody can pay us 100%, especially, and that's the risk of doing business, is that if you're allowing to provide a product or a service and you're allowing them to owe you the money, the dangers of that is that you may not see that money 100%. So this could be a case where maybe this person, right? Oh, I can afford to pay you half now, and then maybe later on I could pay you the remaining half because I'm on a budget. Et cetera, et cetera. Their credit score may be good. They could, anybody can lie on a credit score, right? They can lie on their how much income that they make and, what expenses they incur. And therefore they can get approved, right, by running their credit. Now, of course, that, besides that, you can't assume that your customer is going to be able to pay as much as they can, pay off an entire bill at once, given their circumstances, right? In case something happens to them that they can't afford or they can no longer make a payment, which that's when we're going to dive into chapter 3 about when we write off that bad debt. If we see that a trend that this person isn't paying, then, we can assume that we can take it as a loss. Now, in this case, when you receive the money, never ever go back to them and say, no, I want the money in full. You take what you can get because, like I've mentioned before, they may not make a payment the next time. So here I've indicated that they're going to only make half a payment. And I said, well, this is for the only invoice that they have. Now notice this thing that pops up at the bottom right here in the bottom window. It says an underpayment. And this is how much they still owe us. They still owe us $124.54. So here's the option that you have. You can either leave it as is, so then in case they do pay again for the next amount, they can still make a payment to this invoice. Or you can choose to write off this invoice and say that you're never going to collect it. In this case, he's only making a half payment. We don't know what the situation is, so I'm going to go ahead and select that we're just going to leave the invoice alone. And what's going to happen is I'm going to go ahead and click Save and Close. Okay. Oh, he wrote a check number 1234. Okay. And I'm gonna go ahead and save and close. Now what's going to happen next is let's go ahead and take a look at that particular invoice and see how much they owe us now. So Kumar and Sati, all right, invoice number right here, right? If I go ahead and click on this, right, I'm going to see that here's my invoice. A partial payment has been made because look, now, so you see here, a partial payment has been made. So therefore, the invoice is still outstanding for $124. So this is why we have those options that to let QuickBooks know, well, what do you want to do with this? Are you going to keep it? Are you going to write it off as bad debt, etc., etc.? In this case, I'm going to validate that he did make a payment for this invoice. However, he made a partial payment. So the next time he makes a payment, it's going to recognize that this invoice number 4003 is still available to make a payment to. So here it updates your invoice automatically, recognizing that a payment has been made, but not for the full amount. So that's what's cool about QuickBooks. Instead of having to rely on your own accounting, right? Making sure that, okay, this customer still owes me money. QuickBooks does it for you automatically. Okay? So that's what happens when you can record your partial payments. Accept the money at its, when it's given to you, accept it and record it right then and there because you never know what can happen to this customer. Okay? Any questions in regards to looking at this particular partial payment? Okay? Excellent. So that's the partial payment. Okay? And let's see, we're also going to take a look at, so we did partial payments. Now we're going to be taking a look at credit cards and then discounted items. So once again, right, if I were to go to my receive payments, any way I get there, right, whether it's on the home page, the menu bar, as long as I get to that transaction, right? And now the next one is accepting credit card payments. So I'm going to go ahead and pull up Maria Cruz branch opening, okay, because they have a bill associated with it. They have 3 bills, okay, in the grand total of the $19.50. All right, so once again, if I were to click on here, it's going to give me an error message right here. That's what I mean. You need to type in the amount first before you can go ahead and click on the invoices that are making payments to. So again, yes. Okay, so again, I'm going to say they made an entire payment for all the bills. And of course, it's going to be, let me see, when did they make this payment? Okay, they made this payment on the 29th. Good. Okay, so the 29. Right? And notice this. We recognize that when I typed in 1950, it automatically assumed that this person is making a payment to all of the bills or the invoices, okay? So there you go. Now, here's the thing. She's not going to pay by check or cash. They want to make a credit card payment. So here, this is exactly what I was talking about. You're going to automatically get this little window saying, well, how did this person pay? They paid with a Visa credit card. Okay, you have options, American Express, Discover card, MasterCard, Visa, right? All of those typical large debt collecting credit card companies. Then you're going to go ahead and type in the credit card information. In this case, it's 1234, 1234. And notice this, it's identical to Jerry Perez's, so I'm just going to make it a little slightly different. I'm going to say it's 1212. Okay, so there I type in the credit card information. Now I need to do the expiration date, which in this case is October 2020. Okay, and I'm going to go and click done. Okay, so there you go. I validated. It's running through the system. So therefore, I don't need anything other than just to make sure that I selected that this was a credit card payment, right? It recognizes it's a Visa credit card, okay, automatically. Okay. Usually by typing in just your card number, nowadays the online websites, it automatically picks up what credit card payment you're using, right? Whether it's Visa, MasterCard, or whatever it is. It will recognize it by just entering in just the card number. Okay? And we have the date, the amount, and it's for the Maria Cruz branch opening. And we're making sure that we recognize that there was a payment for all the invoices for the 1950. Okay? Save and close. So pretty straightforward. Any type of form of payment, you just have to recognize two things, right? What was the amount number? And is there a check or number associated with it? And which invoices are you paying? Is the customer paying off? And that's pretty much it. Easy peasy. Any questions in how to enter in a credit card transaction, right? Simple. It's pretty straightforward.
Yeah, no questions. Pretty straightforward.
Pretty straightforward, okay? Now let's go ahead and visit one more type of payment, okay? So let's go ahead and visit Mr. Bob Mason once again, okay? Okay, so I can't even type, so B-O-B. There he is, Bob Mason. So now it recognizes that now there's still two payments I haven't received yet. Okay, my previous invoice, the $39.47, it's gone because it's been paid off. Now notice this. Now I have two only invoices that still aren't paid off yet. And these ones, right, if I double click on this, right, it gives me that the terms here, right, so this is the invoice, I given Mr. Bob Mason, I've given him some terms, okay. In this case, it's only net 30. Okay, hold on, let me, is this invoice number 104? Okay, well, it's supposed to say that I'm supposed to give Bob Mason a 2% net 30, so I don't know why it's not like that. It's supposed to be a 2% 10 net 30. Okay. And I'm going to save and close. Okay, yes. Yes. Okay, so there you go. Now, I am subject, right? So with this right here, okay, I made this invoice, right? So the due date here is going, the date that I issued this invoice was the 9th, okay? That's so weird. It told me to do invoice number 104, and it doesn't have a discount on it. But that's okay, so let's go ahead and take a look at making a payment for this particular invoice. So if I go ahead and click on this invoice, right? Okay. Oh yeah, because I didn't put in here. So, okay, never mind. I got it. It's supposed to be for the second invoice, not 104. It's supposed to be for 106. So in this case, he made a payment for 151.45. Okay, and again, it wasn't for invoice number 104. It was for 106. Excuse me for that. So there you go. So if you guys remember, right, from this invoice, he should have got a 2% discount, right? See, 2%, 10 net 30, okay? So we offered Bob Mason a 2% discount if he paid within 10 days. If not, the whole entire bill is due in 30. Now, of course, I'm going to close that invoice out. And of course, let's say he made a payment as of the 31st, okay? So he made a payment literally 5 days later for the invoice number 108. And here he wrote a check that's significantly less, okay? Because his original bill is for $154.54, but he sent us a check for $151.45. So here, he's already taken out the discount and he's already paid us with a check. Okay, so he paid us with a check. Check number, I think it's check number 5912. Okay. So once again, how do I apply the 2% discount? Because I know for a fact if I billed him out on the 28th, it's barely been 10 days. 10 days would be the 8th of February. In this case, he's making a payment prior to the 8th of February, right? And notice this, it even tells me, hey, I have an underpayment. I'm still missing $3.09. So how am I supposed to apply this discount? So at the very, very top of the window, it only exists here. You have the discount / add credits. Okay, and tomorrow we'll get to see what happens when we apply a customer credit. Okay, or a credit memo. But in this case, we're only focusing on just the payments. So here, only on this window, on the customer payments window, is where you can go ahead and click on discount and add credits. So once you do that, you're going to get this little window here. Okay, it says Bob Mason for invoice number 2019 106, right? The date that it was issued was the 28th, and you gave them, that's the total amount. Now the discount, right? We associated, it was a 2% discount. So as you can see here, it's already calculated the 2% discount. And it tells you that it is for the $3.09, okay? Which is the discount, the amount of the discount. So therefore, everything is calculated for you. All right? And then here, now we just have to associate which accounts belong to what. So of course, you're going to have a sales discount account. Okay, so sales discount account. And you definitely also want to make sure that because Bob Mason belongs to San Jose, that this discount belongs to San Jose. All right, and then you're going to go ahead and click done. Now what you're going to see is the invoice is actually updated, right? So now it reflects this right here, that now it is the discount is taken off for the $3.09. So therefore, this bill is for $151.45. Okay? Even if you were to click on that invoice, right? It's going to appear here that you've taken the discount for the $3. Okay, no, it doesn't show here, but it should show when you make your payment. Okay? So here, it shows you right here that you're taking the discount for the $3.09. And here it is for $151.45. So once again, that's how you apply the discount. And if I go ahead and save and close, it should reflect on the invoice now. Okay. But there you go. That's how you apply discounts that you give. So this was a terms discount. Okay. Where we got to take a look at entering a discount prior to the payment, right? We billed somebody that took a discount because of a sale. That's separate than actually giving a customer terms, because the condition here is they have to pay within a certain amount of time. And if they don't pay, then they are subject to pay the full invoice in full. Okay? So any questions on applying any discounts? Okay, like I've mentioned before, it's pretty straightforward whether you're entering in a cash, whether you're receiving a partial payment, whether the person is sending you a credit card and billing it their invoice on the credit card. It's easy, straightforward. Okay, so now if there's no questions, the last concept I have to show to you is going to be the next portion. So once again, once we received our payment, let's follow that line across and you're going to see record deposits. So once again, if you can understand the idea, right? When your company receives a check in the mail, what do you do with that check? You just leave it in your drawer and it's magically appears into your checking account? No. You got to take those checks to the bank and you got to go physically deposit it for it to appear in your checking account. So same concept applies here too. Here we're just collecting all of our payments, all of our checks, all of our cash, whatever types of forms of payments that we've recognized so far. So far, as you can see in this little bubble, I have a total of 5 payments that I've collected so far from all my customers, right? 4 of them are checks, 1 is a credit card transaction. Okay, so that's what this indicator is for you. Now, general rule of thumb is QuickBooks, once again, only will work for you if you remember to enter in all your transactions. So for example, if I do collect all these checks, right, and I go ahead and deposit into the bank, right? So in real life, I know I should have money in my bank account. But the one thing you also have to do is you also have to update your QuickBooks so it matches whatever that your account that you're dealing with. So in this case, I need to match my bank to my actual information in my QuickBooks, because I still, in my QuickBooks, it's still going to be pending in my record deposits. It will never reflect into my checking account until I make that deposit. Okay, so same thing here, right? You can't have money into the bank account until you physically put the checks into the bank. Go to the bank, place it into the machine, let it count it, the money, and it will go into your bank. So that's exactly what we have to do here. So here, we're going to go ahead and click on the record deposits. Now, there's that window there. And of course, if you go to banking on your menu bar, you'd be able to see record deposits as well. So here, banking. So it won't let me do it because I'm already in the middle of a transaction. So I'm just going to close this and out real quick. So close this out real quick. Right? It still shows that I have 5 pending transactions. If I go to banking, it says right here, make deposits. Same thing. Okay, make deposits, record deposits. There's only 2 ways you can do it, either on the home page or the actual banking on the menu. You cannot do it physically through your chart of accounts. Unfortunately, that's not something you can do. Unless you do a general journal, but once again, those are for more expertise, but you definitely don't want to do it when you have, one that can do it for you. This transaction right here can just do it for you. So there's no need to touch the journal for any reason unless you're making an adjustment. So in this case, I'm just going to go ahead and follow through and I'm going to go on the home page because once again, it's the simplest one. It's the easy one to recognize and so on and so forth. So here, this window pops up. It tells me, right, that I have 4 checks, right? And I have 1 Visa credit card payment, okay? Now, rule of thumb here is that cash and checks function the same way, right? It's money, you're making a deposit, so therefore they function the same way. However, a little piece of information here, which I did discuss briefly prior to that, is that if you are open for business and you allow your customers to charge on a Visa card, credit card, MasterCard, Discover, Capital One, whatever different types of credit card debt companies that are out there, right? Discover, all of those are going to charge you a convenience charge, okay? They don't charge your customer. They charge you as the person who's using this debt collector to collect the money for you. Because once again, right, it costs a lot of money, especially when you have to deal with customers that owe you money, right? So any store that you can think of that has store credit cards, those will typically will cause you the most problems because again, right, you have to deal with them. You have to be the one that's sending them statements, invoices, whatever it is to try to collect your money. And of course, if you're not in the business of collecting the money, right, it might be easier to just pay someone else to just do it for you. And that's what a lot of businesses do now. They sell their accounts receivable to a debt collector. So so they basically get the money, right, and they pay off all the debt, right? But the debt collector is going to be responsible to collect the money from that person. So I don't know if you've seen recently, Walmart has now assigned Capital One to collect all the debt for Walmart. Okay, I don't know if you've seen that, but if you are a Walmart credit card holder, it's now Capital One because now they paid. They basically sold all of their accounts receivable accounts to Capital One to go ahead and proceed and collect the debt for them. Okay, so that's a little fun fact there. But because of that, they're subject to have to pay a certain percentage, whether it's a percentage of their sales, it could be a flat fee agreement, right? I'll give you $1,000 every month, depending on what your business is. Now, most cases, most corporations or businesses, for those kind of bigger entities, they're going to go after your percentage of sales. All right, and we'll talk about that in a second when we dive right into this. So because we have the idea that check and cash, right, they are exactly what you have for face value. So if you received $100, that is $100 you're going to place into your bank account. Okay, if you receive a check for $2,000, it's $2,000. That whole entire check is yours. So in this case, you need to separate your cash and checks versus your credit cards and EFT transfers. Because once again, EFTs, you can also charge interest income or a convenience charge on that. So that's something you need to separate. So in this case, we could go up to the top and say, we could say all types of transactions, or we can do specific transactions. So once again, you could do e-checks, which once again are the electronic funds transfers, your debit cards, your credit cards, MasterCard, Visa, whatever it is, right? You can separate each transaction based on what kind of type of payment it is. So in this case, if I want to look at just my cash and checks, there you go. I just do that and automatically just pops up my 4 checks that I am looking at. I can also take a look at payment methods, right? Did they want to do by name, by amount? In this case, that's not as useful as separating it using the cash and checks form here. So I'm going to go ahead and select them all. So select all 4 payments or checks that you received. And I'm going to go ahead and click OK. So now it's going to add into the list of deposits that you're making. Okay. And here you can make any other deposits that you feel necessary, right? Let's say you just have cash in your hands and you decided to just want to dump it in there, right? As part of your investment to your company. You can do that. Or let's say the owner decides to reinvest more money into the company by writing a check. You can do that. Okay? You can even take money out from your bank account through the deposit, right? And we'll talk about it in a couple seconds. But here, I'm going to go ahead and add in an investment because let's say, okay, so right now my bank account, it's reflecting at what, 10,000 right now? And I actually want to increase it. I want to dump more money into here by adding an investment. Okay, so investments right here, which is an equity account. Okay. Other than that, usually whenever you make your deposits, usually you should do it by the end of every day because you don't want to have your customers penned if they're keeping track of their transactions. General rule of thumb is you should try to go to the bank at least once a day. But if you're a small company, You know, it's also fine if you just do it at the end of the month, whatever makes it convenient for you. Okay, so once again, you want to make sure that it's going to your checking account, right? The date that you're making the deposit and what kind of deposit is it? It's deposit. So once again, here I'm trying to make an investment, and I'm going to go ahead and make a memo here that owner investment. Okay. And of course, he wrote a check. I believe he wrote check number, I think it's six, let's see, 13451. Thank you. And of course, it was a check. Okay. Okay. He paid with a check. He didn't put cash, he put a check. And for what amount? Now, of course, class, it doesn't belong to a particular class just because this transaction, right, is for the overall company, right? It's not for the San Jose location, it's not for the Walnut Creek, it's for the overall company. So in this case, I don't need to associate any classes in it. Now, the amount, I'm going to say he invested $15,000. Okay, so with that, now if you look at my deposits, I'm going to be depositing $16,000. Now again, this won't reflect the same as your book because I went ahead and did the partial payment, so I received that partial payment. Okay, so there you go. Now it tells me that I'm depositing this grand total amount. All right, and then here's the section where I was going to talk to you guys about is that now that you're making a deposit, you can also withdraw cash or hold back cash. Now again, if you do for any reasons, right? So if you're in-store location, most common ones that you would technically use this cashback feature is if you have a petty cash drawer that you're trying to put money into, or a great example is a cash register, right? You always want to replenish your cash register at all given times, especially if you're dealing with customers on the daily and you don't know, maybe this time you have good sales, maybe this day you have bad sales, right? It just depends on the day of the week and if you have any promotional sales. So in this case, you always want to have cash in your register. So therefore, you can go ahead and fill out this information here. Your book tells you how to do it, but in this case, I don't need any cash. I don't have a petty cash fund to establish, and I don't have a cash register that needs any more money. So once I've validated all these transactions have gone through, and I am guaranteed that this is all correct, right? I'm going to be depositing a total of $16,000. Then I can go ahead and click Save and Close. So once you hear that beep of approval, notice this. Your record deposits show that you still have one more outstanding deposit. Okay. If I go into my checking account, okay, and I look at my transactions, you could see that I made a deposit right here for the $16,000, and boom, now my company has $27,000. So here, that's what I was telling you exactly, is that in order to for surely successfully reflect the amount in your check register, you need to make that record deposits, and it's going to show record right here that I actually made a deposit. Okay? And that if I double click on it, it's going to show me everything in there, like what I deposited, my checks that I deposited. So it gives me a description of every single transaction here, like that I've made a deposit and this is what the deposit consists. Okay? So once again, that's how you update your check register by making that deposit. And it even gives you a description here that this wasn't a check that you wrote, this wasn't a bill payment that you paid, it is a deposit. Okay? So that's that there. Okay, so let's go ahead and record our last transaction here, which is going to be your credit card. So here I'm at all types, and I see that there's my only one and last only one, which is a Visa payment. And I'm going to go ahead and click OK. All right, So as I've mentioned before, right, you are subject to have to pay a convenience fee. And because this automatically goes into your bank account, right? Before anything happens, you're going to set up your bank account so every time you do receive it, it's going to automatically take it out right away from your checking account because that's just how, credit cards work, right? It's instant. Okay, sometimes sometimes it takes maybe a couple hours, or maybe it takes maybe 2 to 3 days, but most cases credit card transactions are almost instant. Okay, so that means when you set up your bank account with the holding that credit card information, right, such as your agreements, right, it's going to automatically separate your cost for charging your customers with that credit card. So if you've ever talked to any independent contractor, they're going to tell you best form of payment is cash, or you transfer the money to my bank account directly, because credit cards, you don't get the full money. And a lot of businesses, especially small independent contractors, they don't like that. They want to get every single penny that they earned. So that's just the one thing that you need to know in case you are going into business like that. So first thing I'm going to recognize is that, I believe in your book it says it's 3%. Okay, so that means Visa's going to charge you 3% convenience charge. And where do you place this convenience charge? Well, I already have an account called bank card charges, or bank card fees. Okay, so once again, you get charged a convenience charge. In this case, it's 3% of your sales. So here we recognize it's a bank card charge, and now we need to figure out, well, how am I going to figure out what 3% of 1950 is? So the great thing about this is you're able to utilize what's called quick math. And how it works is you can enter in the function right here, right? In this case, it's similar to Excel, but not really. It's similar to Excel where you can type in all your numbers, but here's the key thing. You don't need to put the equal sign to start your function. You just type in directly, right? 1950, right? And once you indicate that little asterisk, which is my multiplication, it's going to create a little tab receipt, right? As you can see, it's creating a little cute little receipt for you to go ahead and do your transaction. So in this case, it was 3%. So I'm charging 3%, and this time you can use enter to validate this quick math. Okay, so like I said, it's similar to Excel, but not really. The only thing is you don't need to use the equal sign. So notice this. Why is it that now it's increased by $58, and now that I am expected to be depositing $2,008? Okay. One thing you need to know is when you're doing a fee or anything like that, you need to be very, very mindful of where you put the negative sign. So in this case, I'm going to go and clear this out because it's actually going to not be this amount anymore. It's going to be, I'm going to clear it out. It's 1950 times the negative 0.3%. And then now I show that it is now subtracting $58.50, and therefore what I should be receiving in my bank account is now not 1950, it is now 1891. So that was a bank card charge fee because you are collecting the money through letting your customers charge with their credit card. So you're using Visa or MasterCard to collect the debt for you and pay you right then and there. Okay? So that's how you enter in a bank card fee. Now, I've had this question before too. What if you have a whole list of bank charges that you've, let's say you had 4 or 5 Visa credit card charges. How do you solve for 3% every single time? Now what you're going to notice this here, so I cleared it out. What happens at the very bottom? You have your total amount of credit card charges right then at the very bottom. Now what you can do is you can itemize each one if you would like, so you could, get a more accurate information. Or what you can do is you can just take the total at the bottom. See right here. So if I had more than one Visa credit card, I'm going to, take this bottom number and I'm going to multiply it by my -3%. And that should just give you your pretty precise number there for how much you're going to be charged for the bank service charge, for the bank credit card fee charge. So in this case, I only have one credit card transaction for the 1950. I just typed in 1950 right there, multiply it by my -3%, and I get a -$58. So this is what should be reflecting, and you should be able to see this in your bank statement, okay, that you should be charged the convenience charge of using a credit card. Okay, and of course, every bank statement is going to look different, right? If you're having multiple people or like multiple agencies, such as Visa, MasterCard, they all have different percentages and different agreements. Okay. So that's that. Once again, I don't need any cash, so I'm going to go ahead and save and close. And once you get that BEEP approval, now my record deposits account is empty. Okay. Any questions in regards to anything that we learned today? Anything for chapter 3? Okay, so let me go ahead and fast forward to the review questions and let's get started. Okay, so review questions, okay. Number 1, okay. In the new customers window, you find everything except D. Correct. So when you're entering in a new customer, right, the only piece of information that you will have is going to be obviously your customer name, right? Your customer invoice/bill, right? And you're obviously going to have your customer's activity, right? So when we look at the customer center, if you guys remember, right, on the right side of the panel, that's exactly what you're going to have. But you're not going to see your year-to-date sales information because, once again, this is going to be a report. And we will talk about this Wednesday, when we dive into chapter 3. Question number 2, okay? You should record a sales receipt when the customer pays. A, by cash, check, or credit card at time of sale. Very, very important. So the difference between a sales receipt and an invoice, right, is when the customer pays. Did they pay now or did they pay later? Okay? So A is the correct answer here. Okay. Question number 3 says, okay, which statement is false?
B.
B, let's see. Let's go through all the answers and we'll do process of elimination. So invoices are very similar to sales receipts. That's actually true, right? I've mentioned before. You're going to notice that not only invoices and sales receipts are similar, you're going to notice every type of form that you place in or transaction, they're all going to look similar. Okay? But A is true. Invoices are very similar to sales receipt. The only difference between the invoice and a sales receipt is you just have that little window that tells you how did the customer pay. Okay. B says invoices decrease accounts receivables. No, right? It would increase because, again, every invoice that you create, essentially you're saying that the customer owes you more money. So in this case, B is the correct answer. Now let's take a look at C. Sales receipt has no effect on accounts receivable. Yes, because again, sales receipts, you're collecting the money at time of sale. So therefore, your accounts receivable is people who owe you the money. If they already paid you, it would not affect the people that owe you. Okay? And then lastly, D says invoices should be created when a customer are going to pay after. Yes, we already discussed that. That is true. Okay. Question number 4. Okay. You may specify a payment terms, okay, on the new customer's window. However,
D.
okay, Dan says D.
People provide the term fees.
Anybody else? What was that? You said A?
Yeah, it's A, isn't it?
Let's get some other opinions. Who else? Does anybody agree that it's A, or do anybody agree that it's D? Okay, well, let's take a look at this. A.
Sorry.
No worries. Let's take a look at that. The payment terms will only show on a sales receipt. Is that true?
No, because if it's a sales receipt, you're paying right away. Well, there might
Exactly.
be a discount, but it's not going to be terms in the same way.
Correct. A is definitely not true because in this case, you probably most likely will never see it because, like you've mentioned, right? The terms are only given when a customer owes you money, right? And you're giving them an incentive to make them pay their bill, the amount that they owe faster. A sales receipt means to pay right then and there. So can you give them a discount right then and there and say, hey, you have 10 days to owe me, but they pay you right then and there? So in this case, A is not going to be true. B says the terms can only be changed once a year. You can do terms anytime, any given moment. If you feel like you're very nice to your customer and you said, hey, you know what? Today I'm going to give you a 2% discount because I feel like it. So if we saw...
That's what I was thinking in my on A, because you say sometimes they, like if it's a store, they do have sales, and it'll reflect on the receipt when they paid.
Okay.
That's why I got confused. Sorry.
No worries, no worries. And this is what I got to clarify is that terms is a discount given on a specific criteria, right? A circumstance, right? You have to make a payment in order for you to receive the discount. Now, if it's a store-wide discount, it's just a regular discount. There's no need to have terms, okay? And terms are usually applied more on invoices because if customers owe you money, right, your way to get that money as soon as possible is to give them an incentive. Say, hey, if you pay me in 10 days, I'll let you go ahead and give you, take advantage of a discount. I'll give you a generous discount of 5%, 10%, whatever it is, right? Whatever agreement that you want to give them. But that's if they owe you money, because the condition is they owe you the money, and if they pay you in time, then you give them the discount. Where a regular sales discount, whether it's in store, it's right then and there. You take the discount right then and there, meaning that whether they pay or not, you go ahead and enter in that discount. So discount item is separate than a terms item. Okay. And then C, the sales representative must be informed. Okay, that's opinion based, right? Do they have to be informed? they should be the one that's creating it, but on top of that, do they need to be informed that a terms is given? No, not really. You know, anybody can know that. A company could know that, right? So lastly, D says you are also permitted to override the terms on each sales. And yes, you can. So for instance, like what I remember, if you guys saw me, right? For one of the bills, the invoices that we made, right? I changed it from net 30 to 2%. So right then and there, I am permitted to make changes to the terms at any given time. So like I've said before, like I've mentioned before, right? Where B says that you can only change it at once a year. No, if you feel generous today and say, hey, you're a great customer, I'm going to give you terms because I feel like it, you can do it. Yes, you can. Okay. Is it fair to the other customers? Who cares, right? They don't know that other customers are getting terms and you're not. So that's why I'm saying, like, you can create terms at any given time at your discretion whenever you feel like it. Okay. Last but not least, number 5, your company has just accepted a payment for an invoice. Okay. What should you do in QuickBooks to record this payment? Okay, A, open the invoice by clicking on the invoice icon on the home page. Okay, so is opening an invoice having to do anything about receiving payments? You can use the invoice to check on what the customer owes you, but is that a way to record that you received a payment? Okay.
It would be B.
B, create a sales receipt by clicking on the sales receipt icon. Now remember, if a customer has an invoice, they owe you money, right? And you decide that, or they decide to pay you, right? Now remember, what's the difference between an invoice and a sales receipt?
Pay now versus pay later.
Pay now versus pay later. So in this case, if you enter in a sales receipt, you're essentially doubling up on the sales because invoice means you paid later. Sales receipts mean you paid now. So if you have a current invoice and they received a payment from your customer and you decided to use the received payments, you're doubling up on your sales. And once again, the idea is that if you build someone for the invoice, right, and they make a payment to you later, that is not paying at time of sale. Okay? So B is definitely not a correct answer because you can never receive a payment using the sales receipt because the difference between an invoice and a sales receipt is that one is at time of sale and the other one is later. So in this case, essentially, you'd be recording the sales twice, but only receiving one payment. Okay, so B is definitely not the correct answer. So C, make a deposit by clicking on the record deposits icon on the home page. Once again, this is just recording the deposits, right? This comes after receiving the payments. So in this case, the answer is D. In order to properly record that you received a payment is pretty straightforward. You click on the receive payments icon on the home page. Okay, so let's take a look at the home page once again, right? If you created an invoice, right, let's follow the gray line. You should be receiving a payment, and then right after you receive a payment should be automatically into your record deposits. Okay, your sales receipts, right? It skips the section where it says record payments because you're receiving the payment at the time of the sale. So in this case, you notice there's now this gray line. It happens after the record payment. So you're never going to ever see this before in order to receive a payment when you do a sales receipt, because you should be receiving the payment at the same time, and it drops it into the record deposit section. Okay, so that's just a little clarification there. All right, once again, any other questions in regards to chapter 2?